Hello traders, welcome to another daily analysis. Today is December 1st, Thursday. So yesterday during the Asian session, we had the negative data from Australia for their private capital expenditures. Now this along with the already negative sentiment for Australia has been bearish force for the Aussie dollar. Although Aussie dollar is still well supported due to the high yield market environment that we have right now, but it's quite a neutral currency, I would say, at this point, same as New Zealand dollar. Now the Chinese manufacturer PMI was positive, and that was sent some support for Australian dollar and New Zealand dollar. And then in London session, we have many European PMI, which it's not tier 1 data, but they all came out in line or slightly better. UK data was also slightly in negative, but still in line, still above 50. And in New York session, we have the US PMI was also in line, but the job data was a little bit negative. But still, it's not a big tier 1 data. And as many of you know, tomorrow we will have the non-farm payroll. So all this data today are not really important and doesn't send too much impact. But tomorrow the NFP will be important factors for you to take into consideration. Now, as mentioned, right now the market is still largely sentiment driven. Now, of course, the OPEC agreement continue to send this positive sentiment into Canadian dollar. So we see that WTI actually closing above 50 today with another solid green candle. And that, of course, helped Canadian dollar, but also pressure the US dollar. So that plus the job data, and also basically US dollar, as I mentioned, market is not going to be a straight line. So after continuous surge, there's always going to be some retracement. So that alone plus the high oil price sent a little bit weakened to the US dollar. Of course, tomorrow the NFP will play a huge role in terms of what's going to happen. But generally speaking, I still think US dollar is just very solid, and the December rate hike is most likely to happen. And 2017 is most likely still going to be a very good year for US dollar. Now, another major news is the UK. The Brexit minister says that they consider paying the euro for market access. Now, this has been a very good news for British pound, which actually raised very high today. Now, of course, it's a very good news because that shows that further ease the concern for hard Brexit. So they're saying that right now they consider paying the money in order to have the single market access. Of course, that's going to be a benefit for the UK market. As mentioned, that as long as they can still keep this financial hub, as long as they can still have business going, then really they can still be this major capital of the world. So of course, this is going to be a very positive news for UK. But you got to understand, all these things are just talks and rumor at this point. So right now, the hard fact is that it's still a lot of uncertainty of whether they are going to have any meaningful outcome. And also, the Brexit talk is not really solely depend on Britain. You have to understand it's a talk between the European nation and Britain. Now, the agenda is really different, especially the major player from the European nation is Germany. And it's really dependent on whether they want to give Britain a sort of a peaceful outcome, or they want to make example out of this Brexit. So it's really dependent on the political motivations, and that also depends on what's going to happen for the Sunday's Italian referendum, what's going to happen for the election or the poll for Germany and France. So that really have a lot of political motivations that we have to take into consideration. It's not just but of course, like I said, anytime you have this kind of positive sentiment, always gonna send the British pound higher. On top of that, the reason the British pound went higher is because a lot of short sellers start reducing their positions. And as I mentioned, the original drop in the British pound was, first of all, the fundamental reason, but second of all, it's a panic move. So whether how low the British pound is gonna go, nobody knows. But as far as now, the major investment banks do give 1.5, especially pound versus US dollar. They do give a number as 1.5, and right now we are right at 1.2625. So that's still like 1,000 pips to go, right? So that's pretty much it for the British pound. Really, right now, it's going to pretty much always. Right now, it's pretty much going to be like this. Whenever you have good news, it's gonna go higher. Whenever you have negative news, it's gonna go lower. But it's never gonna go too high or too low, just because nobody knows exactly what is going to happen for the future for UK. Now, data-wise, they are doing okay. Of course, they are slightly negative, but things are still under control. Like originally, most traders, investors were very bearish toward the outcome. But ironically, after the Brexit, the majority of their data was actually well supported. So that's why it's really indecisive, basically. Nobody knows what's going to happen to the UK, to the British pound and their future. Another news from European market, ECB, sources from ECB. You always read news like, senior sources, and it's not confirmed, of course, but basically they're saying that extension for the bond buying program will most likely continue beyond March 2017. And that's already, it's not a surprise, basically, because right now they're still in this low inflation market. So they really have no other way but to keep the stimulus program going. But of course, they don't want to continue in this low rate market. So that's why sometimes they have to basically inject a lot of confidence into the market, saying that, yes, we are going to continue the low rate environment, but eventually we're not going to. But of course, this is no brainer. Eventually, as long as the rate meets the inflation target, of course, they are going to finish the bond program eventually. But as for now, it seems like they are going to continue, and that's going to be a weakness for euro dollar. Equity market today was all red. Of course, that again pressure the US dollar from the oil market, from the equity market as well. So, from now till tomorrow, NFP is pretty much going to be a very quiet market, but, because traders and people are still waiting for NFP for tomorrow. So most likely, it's nothing going to happen between now and then, but tomorrow it's going to be give you better direction. But really, for me personally, I don't think it's going to play much difference for the US dollar. It's still very solid, still very well supported. And my personal strategy is still to buy US dollar during intraday trade. Whenever there is a dip, I can just buy a dip. Okay, so let's take a look at our chart. Yesterday, I did enter this pending order for dollar CAD. Now, my logic was, you can actually read it in my website, but my logic was basically that I don't think the WTI, the oil market, is going to go too high. And actually, that was the case, because even though we actually reached $50 today, but it's not, you would actually expect to have a very large movement. But like I said, people don't have much confidence toward OPEC, right? This is not the first time they reach agreement and did not make any effective outcome. So again, this kind of agreement, whether how effective it is, really you have to really think about it, because there is no basic, there's no supervised power into it, and there's no penalty for not obeying it. Right, basically, it's just a good faith agreement. So, what is the driving force for people to actually follow through? Nobody knows. And the reason that Saudi Arabia actually willing to take such a huge steps, just mainly saying that their economy is really cannot survive without oil. So back then, their strategy was to keep pumping up the oil so they can drive out all other competitors. But now suddenly they take a huge shift. Basically, they solve their stance, and it's really not because they suddenly become this nice person. No, it's just because for economic speaking, they themselves cannot tolerate this kind of low oil price environment anymore, and that's why they really want people to all the oil member to work together in order to raise the oil up. But like I say, the reason the oil price is so low, relatively speaking, is due to the supply and demand. And really, if you want to artificially control that, there is a certain limitation. So that's why I entered the trade. But of course, I did not get feels or just cancel it anyway. And also today we have a red candle, but still, I do think we're still very well supported for dollar CAD. If you draw a line here, you're still right at this 1.3296, 1.33 area. So it's really depending on how low it's gonna go, and the 200-day moving average is just right here. So we'll see what happened, but that's a very good thing to always use a pending order so that you actually avoid a lot of losers. And that's one of the strategy I learned from Water. So it's very very good thing to actually use a pending order. Okay, so let's take a look at the 20 yen currencies. And first thing first, I actually just show you my intraday trade. I actually have about 5 positions right now. And just a lot of them are in drawdown, a lot of them are in profit. So I'm just letting it run. Like I said, not much action coming up right now. So basically, I got into a euro dollar actually right at here, right at this pivot level. Of course, it's going against me, and I'm going to get stop out at 1.07. And of course, the dollar is weakening right now. That's the reason. The other one position I have is dollar Swiss. I also got in at PV level and also in a huge drawdown right now. So that's just the nature of trading. For me, it's really not a big deal. Again, I buy at deep and let it. The thing you have to understand that you will never be able to buy at the absolutely low. You'll never be able to sell at absolutely high. So for you is to be absolutely fine to understand you're always going to have a little bit drawdown when you enter a position. It's always going to against you for some time, and then eventually the winning trade is going to go into your direction. But to prevent that, if it doesn't go to your direction, that's why we use stop loss, right? So stop loss is just a point for you to know that you're wrong. So that's just a concept. And that's it. So these 2 position, and I also have CAD Swiss. This also I got in at here 0.75. This one is in profit. I'm just gonna let it run. All these things I'm just letting it run as long as the market fundamental and sentimental is still in the direction. So the reason I still keep euro dollar running, I still keep dollar Swiss, is because dollar is still very solid, well supported. And tomorrow, if the NFP, or even prior to NFP, people might buy into it. But just if all things are equal, US dollar right now, any negative movement is largely going to be short term, because in the long term, it's a very well supported currency. And that's why I'm very confident in buying it and letting it run. And if I get stop out, I get stop out. That's just the nature of trading. And that's for my losing trade. For my winning trade, same thing. The Canadian dollar oil market is still in this positive sentiment. So although in the long run, I am not that confident toward the oil market, toward Canadian dollar. But as for now, I just let it run and all the way until tomorrow we have employment data from Canada. So most likely I'll either stay to break even or just exit the market prior to that. Another trade I have is dollar yen. I also just got in actually at this level. Again, there's no particular strategy. I just got in here and just let it run. Same thing. And the last one I have is a cable short. I actually got in at 1.2630. So right now, a slight profit, but again, I just going to let it run. And all these things I will exit tomorrow prior to the NFP, or at least set to break even, just to prevent any sudden movement. And that's pretty much for this week. For me, it's quite very quiet. I don't really have anything intraday. I don't really have anything daily as well. But let's take a look at a daily trade. Okay, just give me 1 second. All right, so let's take a look at euro. So euro pound today was a very interesting thing. If you're looking at right now, you'll see that we had a really large strength into the British pound, but then eventually it actually went up to against it. So that's why I say that right now British pound does not really have any fundamental strength, and anything you see is the volatility from the sentiment, from the news. So that's why actually whenever you have this kind of signal, it's actually not a bad case to buy into it, But I don't want to buy against euro dollar, because euro dollar is not strong either. So that's why I don't want to do anything in these two things. Dollar Swiss franc, same thing. You have basically a very bearish kangaroo tail, bearish inverted hammer, and today you have a bullish kangaroo tail. So it's really, for me, just an indecisive movement in terms of these two currencies. US dollar actually went higher. As I mentioned, I have one intraday position here, but basically anything below 1.7 and anything above 1.5. So this 200 pip area is really right here. It's this 200 pip area is really what I'm consider a ranging bomb. Right now all these things just up and down here. That's why I'm not interested to take any daily trade, and most likely just using an intraday trade. So I short here 1.6 is actually the midpoint. So it goes against me right now, but it might come back to help me, and I don't care. I don't really know. It's just basically, if you trade sentiment, you always have a low probability, but you make money by letting the trade run. Euro Aussie, another update for euro dollar and another down day for Aussie dollar. Euro CAD, of course, CAD is very strong. So basically, CAD is probably the strongest currency that we have right now. Euro New Zealand is also strong. So again, we have a risk of sentiment today, and that was negative for New Zealand dollar and Australian dollar. Euro yen, again, another update for euro dollar. So British pound, see, pound Swiss, this again another signal saying that you have to question yourself, how strong is this British pound surge, right? It's just looking at the price action, you realize that people don't really have that much confidence. Although you have a very good news come out from Britain, but people don't have that much confidence, because at the end of the day, it's not a fact, it's not a real fundamental. So people are a lot of traders are buying it to make some short-term profit, but nobody wants to hold it for a long term because they don't have much confidence toward the British pound. Now cable is same thing. You are still under this resistance line, and we'll see what happened in the next few days. But of course, dollar is sort of weak today, and that's why it's not as much like other currency pair. Pound Aussie is actually quite attractive. I do like what I see. It looks very attractive to short it. And the only risk is that Australian dollar is not. It's fundamentally strong, but right now the sentiment is really negative for Australian dollar. So that's why I don't like it. In terms of that, but it's actually very attractive, to be honest with you. This is actually not a kangaroo tail. It's not really an inverting hammer because it does not close low enough. We are a little bit few pips higher than. But of course, I am not that picky in terms of that individual candlesticks. I'm just really like the position of this candle, right? I like how it tried to penetrate. You see, we have a little bit gap here. I like how it tried to penetrate it and fail. And I like how we're at this critical resistance area. So I do like this this pattern, and I might actually sell it, but I'll do more analysis later on. But cable pound Aussie looks very attractive to short. Pound CAD, same scenario, actually look quite attractive to short, providing that the Canadian dollar is still strong. But because of the data tomorrow, the employment data, I'm probably not going to do anything. I'm probably not going to short this trade. I might go into intraday trade today. I might go to hourly trade and then see if I have something I can short it. So if I have right now it's 1. If we go a little bit higher to 1.6825, but right now we're still in Asian session, so I'm gonna do it at the London session. But sometimes if I'm not sure, I don't want to hold it for a long term, I'll go to hourly trade to trade it. So as for the daily one, I do like what I see also. It's a very bearish signal for pound CAD. And let's take a look at pound New Zealand. It's actually quite strong. So again, New Zealand dollar, again, it's very weak at this point. Maybe more weak than Australian dollar for sure. Pound yen, another update for British pound. But just look at what you see right now. Everything about British pound is pretty much in this critical resistance versus all other currencies. So that's just the price action alone saying that it does show that they are going higher because of the sentiment, but it's not that solid. And that might be the chance for you to sell, okay? Because when you sell, you want to sell at the resistance. Swiss franc and Japanese yen, again, quite indecisive movement. Dollar Swiss, it's a down day for US dollar, but that does not mean I'm going to short it. As I mentioned, dollar CAD, another down day as well. And dollar yen, it's another down day as well. So all this is actually a good thing for you to buy into the intraday trade. So again, I have position in dollar Swiss. I also have position in dollar yen. Just whenever you have a little bit drop, a little bit deep, you can always buy at deep. And let's take a look at Aussie Swiss. Again, Aussie Swiss is more like an indecisive day. Nothing really particularly on my plate, on my radar. Aussie dollar again went up today. Just shows you that it's really a down day for US dollar. Aussie CAD is pretty much a bearish day, as saying that because of the strength into Canadian dollar. And Aussie New Zealand, I think it will be an update for Aussie New Zealand, because of the strength into the Australian dollar versus New Zealand dollar. Now, as I mentioned, you are actually in this huge triangle movement, but it gets narrower and narrower, so eventually it's going to break out, right? But is this a good signal for me to enter? Not really, just because right now Australian dollar and New Zealand dollar are basically equal, right? I don't really have too much negativity and positivity for these two currencies. And if all things are equal, I actually think New Zealand dollar is more positive, just because they have a better data nowadays, and Australian has the more negative data, and also have basically been dragged down by this commodity price. So that's why I don't really favor Australian dollar over New Zealand dollar at this moment. Aussie yen, again, sort of like indecisive movement. And CAD Swift, again, an update for Canadian dollar, same as CAD yen. And New Zealand Swiss is a down day, but it's not a pair for me to short. New Zealand dollar, it's also not a pair for me to short. But it again, don't have any signal right now. And New Zealand CAD and New Zealand yen. So right now, what I'm interested in to possibly short is actually pound Aussie. Now again, the risk is that we still have this positive sentiment into the British pound, and we have this negative sentiment into the Australian dollar. So you can say that basically the sentiment is going against you at this moment, but the fundamental strength is in the Australian dollar, and weakness is in the British pound. So you gotta understand the risk is that you don't know how strong or how long the sentiment is going to play a fact into trading. Sometimes the sentiment might be short-lived, and that's really where you make your money. So for example, today, just looking at this candlestick, you know that you had a very strong sentiment into British pound, but at the end of the day, it actually all went back. And that just shows you, hey, maybe the sentiment is not that strong into British pound. So that's why I do like to short it, because the fundamental is supported for Australian dollar. The sentiment looks like to be short-lived. The only thing I don't like is really tomorrow you have this non-farm payroll, and also the oil market is still largely volatile. So all these things play into the risk sentiment. If tomorrow the equity market goes higher, US dollar goes higher, and oil market continue to be well supported, then of course you're going to have a risk on sentiment. That's going to be good news for Australian dollar. Vice versa, if tomorrow you have a negative non-farm payroll, you have a negative oil market, negative equity market, then that's going to be risk of sentiment for Australian dollar. But if all things are equal, I do really like what I see. And if I'm in this trade, then my my stop loss will probably be 1.7250, just right, way above this area. So I'll do more analysis, but just let you know, this is something I'm looking forward, quite interested. Other than that, my strategy is still the same for intraday trade. I'm just going to buy US dollar whenever we have a dip, and also buy New Zealand dollar whenever we have a dip. And other than that, just also buy Canadian dollar. But again, it's all just sentiment play, and watch out for the non-farm payroll tomorrow, because that's going to be a volatile event, and I'm going to trade it if we have a positive data, a positive surprise into the US dollar. So I'm going to trade that one. And what is the positive surprise? Let's take a look. So we are expecting, now when you trade this kind of data, you gotta understand the most important thing is that you want everything to be in line. So you have average hourly earning, non-farm employment change, and unemployment rate. What you want to see is all three data to be positive. That's the first criteria. If you have a mixed data, then I would suggest you to stay out, because then you don't really have a good probability to go up. Vice versa, if you want a short, then you want a three data to be negative, right? That's the first criteria for me personally. The second thing is that you want one of the data to be a surprise. So let me give you the surprise number, and then you can see which one. Of course, the most important thing that people are looking at is the non-farm employment change. The second thing is really unemployment rate and average earnings. So they are quite important, but non-farm employment change is the most important one. So we are expecting to have 175 routers, and we have 177 here. So that's the expectation. If you have anything above 230,000, you have 230K, that's a positive surprise. That's a positive surprise. If you have anything below 140K, that's a negative surprise. That's a negative surprise. So again, I'm only looking to buy US dollar. So I'm looking for something that's above 230,000. 230,000 will be a maximum number, and that will be a positive surprise. In terms of average hourly earning, 0.2% is the expectation. If you have anything above 0.3%, that is a positive surprise. So 0.3 will be a positive surprise, and 0.1 will be a negative surprise. Unemployment rate, the expected number is 4.9%, and anything above 5% is a positive surprise, and anything below 4.8 is a negative surprise. So if you wanna buy into these non-farm payroll events, looking first of all three data have to be positive, and one of them have to be a surprise. So you either have something more than 0.3, or you have something more than 230, or you have something more than 5%. If you're looking to short it, then you want something that's below 0.1. You want something that's below 140, and you want something that's below 4.8%. So that's how I trade it basically for the US dollar. Now, if you're looking to trade Canadian dollar, then the only thing I suggest you is watch out for the WTI market. So before you enter this, watch out what's happening in the oil market. If the oil market is continuous going higher, then even if you have a negative number, basically the probability is low because you're going against the oil market. So what you want to do is always take a look at oil market before you enter any Canadian dollar trade. And the employment change, the expected number is minus 16.5. And if you have anything that's minus 30, minus 30, that's a negative surprise. If you have anything that's positive 15, positive 15, that's a positive surprise. Unemployment rate is 7%. Anything above 7.1 is a negative surprise. Anything below 6.9 is a positive surprise. Oh, sorry, same thing as this one. Sorry, I forgot to add. I forgot to remind you, whenever you're looking at unemployment rate, of course, you're looking for number. The larger the number, the negative it is. So that's sometimes a confusing point, because for these two data, you want the number to go large means positive. If you have a smaller number, it's negative. But for unemployment rate, it's the opposite. If you have a higher number, that's a negative. If a lower number, that's positive. I know it's no-brainer, but sometimes when you trade these kind of events, especially when you are, in this kind of very shortened time frame, 5 minutes, 1 minute, you get nervous, right? And sometimes if you get nervous, you get confused and you forget. And that happened to me many times before. I forget that the number is actually opposite. So just to take into that consideration. So that will be tomorrow's headline, these two events to trade. Other than that, it's pretty much the end of the week, basically, and then that's it. So I'm going to do more analysis for this possible trade, Pound Aussie, and you can feel free to follow me to see if I take a trade or not. I'm gonna actually take them into more consideration. Other than that, I don't have anything on my plate. And for intraday trade, and if you're interested, if you have a down day for a dip for US dollar, you can feel free to buy it. Actually, just have the adequate stop loss, basically, and whatever strategy you want to use, it's all valid. So other than that, guys, if you have any question, feel free to comment below or just email me and let me know. Other than that, I will be back tomorrow for a week, Friday analysis. And tomorrow, play safe for non-farm payroll if you decide to trade. And again, you don't have to trade every event, and it's really critical for you to trade a selective data. So don't trade it just because it's a non-farm payroll. Only trade it when you have an all positive number or all negative number, and only trade it when you have some surprise. That will really increase your positivity. And for Canadian dollar, only trade it along with the oil market. So take a look at the WTI market, before you enter any Canadian dollar trade. Okay, guys, that's it. And I hope you enjoyed this video. Let me know if you have any questions. Thanks for watching. Thank you very much. Bye-bye.